Welcome back to Driven by Dreams. Today, I'm excited to welcome Steve Thomas, a military veteran turned financial advisor who brings a disciplined, mission driven approach to money and investing. With a background in equity research and a passion for value investing, Steve now helps individuals and families grow wealth and gain financial confidence. He's all about making financial education accessible and empowering people to take control of their future. Let's dive in. Hi, Steve. It's great to connect with you today.
Great to connect with you as well.
So, could you start by sharing a bit about yourself?
Sure. Anishka, I just want to say thank you, first and foremost. But my name is Steve Thomas. I am the founder of Zen Dhandho Investment Services. We are a financial education company. We do free education, coaching to all our clients. And really, my mission is just to help one person at a time discover the power of understanding personal finance.
So, you started off with a military background, right? So, how did that shape your approach to investing and advising?
Yeah, so I am a U.S. Army veteran. I served for 22 years. Um, I've been all over the world. I have a lot of experience. I've been to war, so I've learned a lot, right? And when I started out in the military, I would say as a younger enlisted member of the armed forces, I had to be creative with money. So early on, I started to educate myself on finance, and through my experience in the military, I decided that I wanted to pursue teaching finance because that was a big part of my background in the military. Was I was a teacher as well. I was a drill sergeant in the military. I was an instructor for a long time in the military. So breaking down concepts and allowing individuals to develop and grow is just something that has come naturally to me. And so that's why I wanted to venture out in finance because been a passion of mine. So yeah,
That's great. So, what inspired you to become an entrepreneur?
yeah, absolutely. So I think entrepreneurship is very important, and I believe our society, entrepreneurs really have led the way. They've taken maybe an idea that wasn't theirs and expounded and created something uniquely their own. And I worked in the financial services industry for about 3 years, and fairly short time. But in that time, I became fully securities licensed. So I'm a stockbroker essentially, and it enabled me to go even farther in depth on my knowledge base. So that really allowed me to know much about the industry and really incorporate some changes I'd like to see. And one of the major things is accessibility to high quality financial information. So I felt maybe there's a need out there for those individuals that maybe can't and don't have the access to high quality financial education. I can be that resource for those individuals.
What drew you to value investing over other strategies?
Well, Warren Buffett drew me to value investing, and really a man by the name of Phil Town. I had the opportunity to go to a seminar that he hosted, and he really introduced me to the concept of finding really intrinsic value in our investments. And Zen Dhandho actually comes from a very prominent value investor by the name of Manish Prabhai. He authored the book The Dhandho Investor, and he's a very prominent value investor, which has inspired me to incorporate value investing, which really looks for quality investments without having to pay an exorbitant price, right? So, investing, in essence, is finding opportunities, investments that others aren't seeing, and we do that by fundamental analysis and really doing a deep dive into those type of concepts to uncover value in investments. And that's really what I'm trying to teach With personal finance, I want individuals to be able to do that on their own and not have to consult a professional and pay a professional. They can do security analysis on their own and build their own portfolio and manage their own finances, all encompassing, on their own.
So, what are some of the key things they need to know to be able to do that?
Well, I would say the first thing with a value approach and what I appreciate is the research required, right? So one thing I would say, if you want to get into value investing, that you have to be ready to learn, really to learn about kind of economics, right? And kind of the workings of finance within a company, what it takes for revenue, right? What it means what debt means to a company. So really the understanding of what it takes to build a business, right? And said business have the ability to know what levers need to be pulled, pushed in order to be profitable. And so someone like myself, being a value investor, being able to look at a company and know that maybe current market conditions aren't favorable, but really with an individual company, the story does not change. And you are able to, at times, find value where value may not, exist, essentially.
So, how do you approach evaluating a potential investment? Could you walk us through your process?
Absolutely, absolutely. So, value investing, Warren Buffett is really famous in with the concept of understanding the business that you're going to buy. Buying the whole business is something that Warren Buffett wants, and value investors really want you to do. Understand the business. So the first thing I would say is if you want to invest, get into an industry or a sector that you understand first and foremost as a value investor. And then look at their financials, right? So that's normally the first step I take. I look in industries that I'm familiar with. I tend to look in tech industries. And then I will pick out companies that have strong financials, right? So there are some factors that I'll look at, like price to earnings ratio, right? So simply price to earnings for every dollar. A PE ratio really is essentially what investors are willing to pay for every single dollar of earnings. So that's one value metric, right? That is a simple one that you can look at, and that I look at really as a screener. So maybe I say I'm looking for companies with a PE of 5 to 20, right? So now I've narrowed my selection criteria down, and then within there I may look for other metrics like earnings per share, and I'll evaluate their growth over a period of time to ensure that it kind of meets the gates for being a quality investment. Because we want companies that are making money, and then from there, I incorporate some technical analysis. I might look at some charts, right, and I'll look at candlesticks, right, I look at things over a time period if it's something that I am looking at investing in. So we start with, to answer your question, really we start with the industry and do a quick view in the industry to see which companies fall into my criteria, my value criteria, and then from there, I'm taking out probably the companies that maybe have potential, growth potential in the future. Some companies, may have seen their best growth behind them. So you have to be careful, with when looking at ratios. You do look at the breadth, the stretch of the industry, see what's out there, compare, and really find the companies that align with those principles. So that's where I start, And then when I'm working with clients, that's how I build portfolios. You know, value centric portfolios for my clients as well.
Thank you so much for explaining that. So, in your experience, what are some common misconceptions that people often have about value investing?
I would say that value investing is dead. I would say Warren Buffett, who was taught by Benjamin Graham. You know, Benjamin Graham is known as the grandfather, but really the founder of value investing. In his book, uh, The Intelligent Investor, really should be required reading for any value investor. But Warren Buffett was a pupil of Benjamin Graham's, and you know that concept of value investing has been around since the 1920s, 30s, Depression era. Benjamin Graham was finding value in things like bonds, you know, those type of fixed income securities. You know, investing has changed a lot in 100 years, but his concepts still prove true today in finding undervalued securities that exist just due to economic conditions, right? I mean, now, so that's why I say the concepts are old, right? And Warren Buffett is kind of looked at as an outlier, right? They teach us, you know, in finance about the efficient market hypothesis, right? Really, essentially says at any given time, you know, prices are right because it's based on the information that's out there, right? So typically, typically it goes against convention to say that you can find value in a stock, uh, other than just kind of relying on the information that you have currently right in front of you. But many prominent investors, Peter Lynch, again Warren Buffett, uh, there are a lot of prominent value investors that they're getting a little older, but again, the value principles still exist, and the value mindset really, and what I love about value investing is the diligence it forces you to have when evaluating a company. That's what it takes to find value. It takes time. You know, you just can't pick. You know, go to the S&P 500 and pick a stock. It takes time to find value, and I believe, you know, maybe one of the misconceptions is that there aren't there aren't values out there, and I would say you just have to kind of evolve your hypothesis on what value is. I think that's moved in time, but value investing will always be a critical component to any, you know, well-rounded. It's not the only investing strategy, but it's a strategy that you can have confidence in your security selection, and and you can have confidence in your ability to find just good companies. So yeah, to answer your question, I'd say the common misconception, one of the main ones is that value investing is dead, and I would say it's alive and well, and hopefully individuals can just keep that fire for evolving the practice of value investing in time.
Well, thank you for clearing that up.
Yeah.
So, how can people balance long term investing with short term financial needs?
You build a foundation. So you start with things like an emergency fund. Um, and again, you build that foundation, and you set goals, right? So you have differing goals. So if you're young starting out, maybe just graduated college, you might be dealing with student debt for the better part of a decade, right? So goals may be a little harder to attain, right? But you can still achieve them if you have a plan, right? And I think that's where a lot of folks in personal finance kind of go awry, is they don't have a plan, and they don't have a point of reference. Well, last year I had this month and this much, and my portfolio has grown to Z, right? So if you say, I have a goal of retiring with $2 million, okay, and you're 22 years old, you've just graduated college, but guess what? In between there, you're probably going to have to buy a house. Maybe you're going to have a family. You're going to need things to sustain. So you're going to need income, right? So there's just a lot of things that in personal finance, so it's really goal centric, like you're saying. Maybe in 5 years, once I've paid off my student loan debt, I will start saving for a house. So the home buyers are on average now, I think, I just read 39 years old for first time home buyers. So that's moving to the right. It's getting harder to buy houses in this country. Will that change? Who knows? But I would say don't worry about it. As long as you prepare yourself, make a plan, okay, and stick to it, and put those goals in there. I want to buy a car. I want to buy this. I want to live here. I want to move here. Write those goals down and allow yourself the parameters to meet those goals. So we talked about an emergency fund. So the foundations, making a budget, having an emergency fund, knowing the importance of protecting the assets that you do have. Because maybe at 30 or later in life, you have more people to support in your life. So you might need, life insurance to just in case something happens, your family is able to live the same standard of quality of life that they're accustomed to. So in finance, we're all at different phases in our savings journey and our journey to retire with peace of mind. And the earlier you start, I mean, you're at a great point, and really the earlier you start, the better. And the earlier you understand, and these concepts, that's one of the main things with Zen Dhandho that I am trying to stress is this stuff isn't that hard, right? It's the type of thing that should be taught. Simple things like knowing how to do your taxes, right? As soon as you start getting tax returns, maybe you can put that towards your goals, right? So there's a lot of things that we can do ourselves to ensure that if we want to retire at 40 or if we want to retire at 60, we have taken the steps to do all those things.
So what role does that planning and strategic investing play in building a sustainable business?
Well, if you treat your business like you treat any investment, like your personal financial foundation, if you structure your business to protect your business like you would protect your own finances, I think that's a great start. Because I will tell you, this is my first business venture, but I will tell you the principles that I've learned through value investing have really taught me the effective base structure, for a business, and the importance of branding. And because if you look at the top companies in the S&P 500, a company like Coca-Cola, right, or Guy insurance companies, Geico, these companies that have been around for forever, they started with entrepreneurs like yourself and myself, right, with an idea, and they were able to codify that idea and grow that idea and build that brand. So I think having your house in order, your personal finances in order, will enable you to be a better entrepreneur because you know how to take care, right, of the things that are important, and hopefully, budgeting and documenting and knowing what you have, right, at your disposal, knowing your assets and knowing your net worth, something as simple as that. It's important. And then again, you can translate that into whatever business venture that you're pursuing, you can fall back on that foundation, those financial principles that you foundationally built, through time and just experience.
You mentioned before that value investing has been around for like 100 years, that it's going to stay. But how do you think the future of it will change in a world moving faster and becoming more tech driven?
Right. I will tell you, it is going to change. And investing changes every day, and you're exactly right. I think the availability of information is the most powerful thing in investing. And democratizing that information is important as well. So, the small investor can have the same resources that a big brokerage like a Goldman Sachs or one of those major brokerages can have the same platform, if you will, to be successful. And I will tell you that's happening. So again, information is important, and with value investing, we may look at different aspects of value. Those the things we may have looked at and said, that's the definition of a value investment 20 years ago isn't the same today in 2025, and in 10 years it probably won't be the same either. So I think for a value investor, and I know the ones I follow, a lot use derivatives. Okay, a lot of value investors I know, they use, you'll see hedge funds, right? And they'll use differing strategies, and that's how I've seen the craft grow. Just in my time, it's just, a hedge fund ran by a value investor is using, they're shorting stocks, right? They're using call options, they're using put options, they're doing a lot. So the craft has evolved. It really has. And for the little guy like me, really the advent of AI is giving us a lot, right? As far as the democratization of information, right? AI is able to pull a lot of information, and a lot of those sources of information are accessible by AI, which is great. Like I said, because the small investor, and that's how value investing to me has changed. I am able to produce and do analysis for a lot more than I was able to do before, right? Maybe I'd spend a weekend, on the internet doing in-depth research and analysis. I'm going to different sites like the SEC, right, where they have all those quarterly and annual reports, and you're manually pulling data from there and maybe building a spreadsheet. Nowadays, I don't have to do that, right? I can, as long as I'm checking AI's work, right? I can do things a lot quicker, right? So, and find value opportunities a lot quicker. And maybe a value opportunity only exists for 6 months during a, significant financial event like tariffs or something like that, right? So, I mean, I'm not a huge fan of Jim Cramer, and I know, but he's a prominent talking head in the financial space. I mean, but I do agree with one thing he says is there's always opportunity somewhere, and I do believe that there is always an opportunity somewhere in the market, and if you have tools at your disposal, then why not use them and use them effectively? And those tools are evolving. So again, this craft is evolving with the times.
Thanks for sharing that.
Yeah.
So, could you share a book, podcast, or resource that impacted your career?
Yes, I would love to. So, rule number one, investing, written by Phil Town, really changed my perspective on investing. And he did something that I am trying to do today. He broke down investing in simplistic terms that I could understand. Okay, I'm not the smartest person in the world, right? I need some help in coaching, and he was able to explain value investing in a way that I could understand and that I could. He gave me a skill set that I could take with me. You know, how to do a discounted cash flow analysis on a stock to find value, or doing an intrinsic value analysis on a stock to see where its value lies, right? So that book changed it for me, and I would like to give credit to Mr. Monish Prabhai as well, and the Dhandho Investor. So those two books have really impacted me as a financier, as a finance coach, and a value investor the most, I would say.
Well, I think this is a good place to start wrapping this up. So, do you have any final words of wisdom that you would like to share with our audience?
I would just say, and as my moniker goes, is really value. The information is so readily available nowadays, and with the advent of AI, it's such a powerful tool. And I would just say, if you have time, if you have free time, read. You know, reading isn't going anywhere, and enhancing your knowledge base, that is still important. So if you're interested in value investing or personal finance in general, you can always go to zendando.com, and we can help you out there. I do free coaching, no strings attached. I just want to help one person, and as long as I can help one person, that's it. And what I'll tell most people is, you can help yourself, right? You don't need to pay anybody to get you smart on finance or to manage your portfolio. You can do it on your own, and that's really what I want for folks to do. Use your time wisely, learn, and do it on your own.
Well, thank you so much, Steve. I enjoyed our conversation and I loved hearing about your journey. Well, thank you.
Well, thank you for having me, Anishka. It was a pleasure.